Liberation Day is almost here. I can smell the victory in the air. The end of the world's trade war against the United States. Oh man, the Trumps are crushing. I'll read this right here. Liberation Day and the end of the world's trade war against America. Right here, the global trading system is rigged against the US of A. Yep. Consider Europe's VAT regime, value-added tax. A German automaker exports a car to the US, tax-free, thanks to a VAT rebate, all right? Value-added tax. We don't want a value-added tax. We don't. An American automaker shipping a car to Europe pays embedded US taxes first and foremost, and a European VAT tax upon entry. One enjoys a de facto export subsidy, the Europeans, Germans in this case. The other faces a tax wall. The World Trade Organization, in its infinite wisdom, allows this disparity and has repeatedly blocked American attempts to address it through legal or tax code implications or innovations. The Foreign Sales Corporation regime, illegal. Domestic international sales corporations, legal. Export tax incentives, illegal. Yet the Germans can subsidize with a VAT rebate their exports to us. Tariffs, as it turns out, are the only instrument left that isn't prohibited by the rules of a game designed for America to lose. That somehow we support. A tariff of 25% on European goods would not be punitive. It would be compensatory. It would allow and account for an embedded tax burden American producers face, neutralize Europe's VAT tax advantage, and most importantly, do what every past effort has failed to do. Signal that the playing field is about to tilt back to the American worker. And I can't tell you how many, I was listening to my man, Well-Track, Connie Mack, or Constance Mack, whatever, I can't remember, Consuela Mack or something like that. She interviewed Ed Yardeni. I'm familiar with Ed Yardeni. I could not believe Ed Yardeni said Smoot-Hawley caused the Great Depression. I was stunned by it. I was like, I was stunned. That was so incorrect. I was like, what? I couldn't believe it. Anyway, so right here we got the old orthodoxy is dead. The idea that tariffs are inherently self-defeating relies on a central old orthodoxy that has not aged well. Critics invoke Smoot-Hawley, ignoring the fact that America's greatest industrial expansion occurred under a high tariff regime. I told you about the McKinley tariff of 1890. It was reduced a little bit when the Democrats took over in 1892, and then it was increased even more under the Dingley tariff after 1897, and America went on a mass industrial revolution like we'd never seen. We overtook the Brits because the Brits fell for the free trade gimmick, and by 1913, we had the biggest, longest tariff in the history of America, and we had the biggest expansion of industrialization under a tariff. And inflation was moderately high for back then. In today's dollars, it wasn't high at all. I'm just telling you. It was moderately high for back then, because don't forget, from 1870 to about 1913, other than the 1897 and 1913, there was mass deflation. From 1878 to 1897, mass deflation. So inflation under the Dingley Tariff Act happened, but it happened because of mass economic growth, and we didn't have that previous to that. All right. The Great Depression had far more to do with the monetary collapse than border taxes. I could not believe Ed Yardeni. I was like, what? I'm stunned by this. Meanwhile, what passes for free trade today is anything but. Global commerce is dominated by managed currencies, state-backed subsidies, and a vast network of non-tariff barriers, all working to suppress U.S. production and inflate foreign leverage. Yep. Right here, my man John Michelson wrote in the Wall Street Journal, a deindustrialized America cannot sustain military primacy. It can't, much less economic independence. That's what I say to people all the time. We're like, oh, man, the tariffs are good. I said, do you recognize, again, I've said it so I'm blue in the face, we rely on China for semiconductors and large power transformers, just to state two things. Never mind all the stupid things during the pandemic. We rely on our biggest economic rival, if not outright enemy, who steals our intellectual property. They steal our intellectual property and sell us the products that we design, we innovate, and we make back cheap with slave labor. By the way, that there's the building that went down in Thailand because that earthquake was built by China, by the way. Just FYI, it was built by China. People are like, oh, China does everything so much more better than America. Okay, because they cut costs, because that's what communists always do. For investment to flow into factories, supply chains, and workforce development, companies need stable price signals. Tariffs provide them, and unlike central planning, commies, they require no bureaucracy to administer. They function like a carbon tax on mercantilism, except they encourage employment, not austerity, 100%. China remains a fortress of subsidies and forced tech transfers. The EU clings to legacy protections. Even allies like South Korea and Taiwan deploy tax tricks. Yep. Liberation Day, not the start of the trade war, but its end. Yeah, 100%, man. I could not agree more. So let's read this right here. Real quick. Trump has sold this not to be the boy who cried wolf. Liberation Day will be remembered as a day Americans said, no mas. We will not subsidize our own decline. Yeah, 100%. I can't believe it. So here's my man John Michelson writing the Wall Street Journal right here. Trump administration's approach has upended the status quo on free trade, which doesn't exist, of course, creating an opportunity to rebuild American industry, reclaim our security, and create manufacturing jobs at home. The approach also represents an opportunity to reorient our economy away from finance and the coastal elites. Yep, absolutely. I just want to show you something. I'm reading this article right here. How the Wealth Was Won. Factor Shares as Market Fundamentals. This is 98 pages of these guys who wrote for the National Bureau of Economic Research. And let me show you my Twitter page. I'm just going to give you a sample of what was in there right here. The profit share, earnings over... I forgot what the Y stand for. Earnings over profit share defined as the ratio of after-tax profits to net value added for the corporate sector. That's what it was. Okay. So let's go back to my Twitter thing. So the profit share is basically how much profit the company kept for its shareholders versus labor share of the net income. Their conclusion, decomposing the components of corporate earnings reveals that the vast majority of the increase in the profit share came at the expense of labor compensation. You can see right here is a profit share. This is a 19, let's see what that says. I can't remember off the top of my head. That's a 19, yeah, right there. Try boosting his post, maybe later. 1990, right there. The profit share is at its lowest, and then it went way high. 1990, labor share was at basis highest and went low. And that's what's happening right here. The corporate earnings reveals that the vast majority of the increase in the profit share came to the expense of the labor, i.e. the shareholders got it, not the labor. All right, and we know what the biggest expense of companies are is labor costs. So they've been outsourcing their labor costs for cheap labor and reaping the benefits of that with their higher corporate profits. And yet the economy as a whole has only grown significantly slower than it did previously. That's a great piece. I'm not even done reading the whole thing yet. See if I can't find another highlight because I want to share something here with you. Oh, come on, let's keep going. It's a good feeling. A natural rotation scheme that shocks from a VAR, not value at risk, what they call something else. I forgot what they call VAR. That pushed labor income and asset prices in opposite direction, explained much of the long-term trend in stock wealth. Labor income goes down, asset prices go up. Yep, 100%. I forgot what VAR stands for. We find that neither economic growth, risk premium, nor risk-free interest rates has been the foremost driving force behind the market's sharp gains over the last several decades. Indeed, the single most important contributor has been a string of factor share shocks that reallocated the rewards of production without affecting the size of those rewards. Our estimates imply that these shocks increase profits to such an extent that they account for 40% of the market's real per capita increase since 1989. Well, that's not good. Growth in the real value of corporate sector output contributed just 26% of the increase in equity values. Are you hearing that? Growth in the real value of corporation profits only accounted for 26% of the growth of corporate equities. That's not good. Right? And by contrast, while economic growth accounted for more than 100% of the rise in equity values from 1952 to 1988, this 37-year period, from 1989 to 2017 created only 1/3 of the growth in equity wealth generated over the 29 years. I mean, this period, 37-year period from 1952 to 1988 created only 1/3 of the equity growth in the markets, even though they had 100% of the equity growth was attributed to the economic growth. I don't know if that probably don't make sense, but hear me out. The economy and the corporate equities went hand in hand. The price of stocks went hand in hand from 1952 to 1987. From 1989 to 2017, the economy went like this, and the corporate equities went like that. What happened? What happened? Labor got screwed, you know and I know. We sent manufacturing jobs overseas. We outsourced, and as such, yeah, if you owned shares, you loved it. But the economy in of itself did not grow to the extent that the stocks did. And that is not sustainable, my friends. It's just not. We're living off the largesse of past generations. The shirt sleeve to shirt sleeve generations upon us. We've got to change course, and the only way to do it is to bring jobs back home. And it's a national security issue. It's just that simple. And we got to get it done. Liberation Day is here, and I freaking hope Trump goes with it. It's going to be fantastic. Oh, but Josh, don't you know? We have free trade with Canada. Why would we want to punish our neighbors to the north? Because they've been punishing us for years. Again, it's not punitive. It's not. It's what we're saying is, okay, no, we'll play that game too. We got to protect our own industry. 100%, man. Absolutely. Doggone right. About doggone time. Love your thoughts. Smash that like button.